Dow plunges more than 1,100 points and marked its longest streak since 1974. A CNN story here. And this happens when? Right after they cut the rate. So the Dow Jones drops 1123, 2.6%, marking its 10th consecutive losing session, the longest streak since 74. President Gerald Ford. This follows the Federal Reserve's projection of only 2 interest rate cuts in 2025 compared to previously anticipated 4. Jay Hatfield, CEO of Infrastructure Capital Advisor, described the Fed's actions as hawkish cut, a signal in prolonged tight monetary conditions. The S&P 500 and Nasdaq Composite dropped 3% and 3.6%, damn, respectively, as investors reacted to the Fed Chair Jerome Powell's comments. Futures data showed a dramatic shift in expectations with a 98% predicted chance of a January rate cut plummeting to 6%. Wow. From 98% to 6%. Chris Zaccarelli, CIO at Northlight Asset Management, said markets were underwhelmed by the likely future paths of interest. And by the way, while this is taking place, guess what happens with mortgage rates when this announcement was made? Okay, mortgage rates surged following the Federal Reserve rate cut, with the average lender increasing rates by 0.2%, pushing the top-tier conventional 30-year fixed rate back above 7%. Jeez. The spike was unrelated to the actual cuts, as Jerome Powell. We moved pretty quickly to get to here, and I think going forward, obviously, we're moving slower, and that is what scared the crap out of everybody. Tom, thoughts?
Well, everybody thought that it was going to be a party that went all the way back down to cheap money. And what the Fed is saying is it's going to be cheaper money at a responsible level. And that responsible is defined by the Fed. One man's responsible is another man's unreasonable. So, okay. So what the Fed did is they came out and said, hey, look, we've given you a full 1%, a quarter, a half, and a quarter. You know, this should really help out businesses. That's a full percentage point down on that. But the mortgages haven't responded because the bond market is following that. And that is because the demand for mortgages is not there. And so there is no incentives for the banks to compete with each other, and there's nothing to push the bonds down at the moment. And so right now I looked this morning for 750 credit on a 30-year fixed. I was seeing 6875. So again, just like the article said, almost 7%. And, you know, me and many others were thinking that the end of this year, we could be at 5.875, 6 1/8, but it's not happening because the number of homes that are available, the inventory is still down. So if there's not a lot of homes available for sale, then there's not a lot of demand for mortgages. And if there's not a lot of demand for mortgages, why would the banks sort of compete against themselves and there's nothing to move the bonds? So for next year, what he's saying, we only see about 2 cuts. But remember, this year they were thinking that there could be up to 6 in the second half of the year, and there's only been 4. So tomorrow's another year, and tomorrow's another day. We will see what the economy brings next. We will see what the Secretary of Treasury does when approved and get to put their policies and their tax package together in April. We will see about that. And as of right now, the market was looking forward to really cheap money next year. They are now been spooked. It's a buying signal right now, folks. It is a time, this to me, talk to your RIA or read your articles and go to your Schwab account or your Robinhood account, make your own decision. But usually a drop like this is a buying signal because, you know, you've got the market is spooked. And we're also coming to year-end tax harvesting. So that's what's going on.
Adam.
So the relationship between Trump and Jerome Powell is a tricky one. So the Fed is supposed to be independent. It's supposed to be apolitical, right? So taking you back for the last couple decades, you know, Alan Greenspan and Bill Clinton, okay, separate. All right, good. George W. Bush, Ben Bernanke, Obama, Janet Yellen, and then Trump. He brings in Jerome Powell. And Trump does what Trump does. He stirs the pot. Rob, I actually sent you this. He tweeted about Jerome Powell, his own nominee, who is now chairman of the Fed. He asked the following question. My only question is, who is the bigger enemy, Jerome Powell or Chairman Xi? Who's the bigger enemy to America? you remember when he did this tweet? You can pull it up, Rob. I texted it to you, buddy. This was August 23rd of 2019. I texted it to you, Rob. So Trump messes with the Fed, and do you know when Powell's term is supposed to be up? It's in May in 2026. There was a hearing where Jerome Powell was speaking, and this is very recent. They said, Chairman Powell, do you plan on finishing out your term? Do you plan on, if Trump fires you or if Trump wants to see you go, will you stay? He goes, I'm staying. I'm not leaving. Right. Basically his version of Wolf of Wall Street. I'm not leaving. I'm not going anywhere right now. Do you have that text, Rob? I texted to you, buddy. But the point is, whether Trump will replace Powell or not, we'll see what happens. But the Fed is supposed to be independent and apolitical, but Trump does what Trump does and just kind of gets involved. And I don't think that...
well, that meeting hasn't happened yet, right? The two of them meeting. And the part you have to realize is that Trump's background is what? How did he make his money? Real estate. Okay. So there's a few things he did when he became a president. Remember the tax write-offs, Tom, on how it was limited to a certain amount of money back in it, like the bigger houses could get a bigger write-off. Do you remember that?
Oh, yeah. And it had a trickle-down effect because you could only take, it hurt California because you could only take so much of your home interest because the federal government said, no, there's going to be a limit of how much interest deduction and property tax exemption you can take.
Which hurt rich people.
In blue states.
Which hurt rich people in blue states. So you kind of like, whoa, what was that all about? I thought, you're a rich real estate guy that understand us other rich people. So this whole thing about all the things he does is about rich. It's not necessarily 100% true. He understands real estate. The other thing that's going to be happening is the following. Remember this. How do you cause Congress to pay attention? How do you cause certain laws to change? How do you cause certain cities to pay attention? The other day, Sonos, which the worst update ever. I love Sonos until they did this recent change, and even their own employees don't like what Sonos was doing. I got online and I'm like, look, this is the worst thing ever. I said, what's a good replacement? There was another tweet I put before this because I first gave him an opportunity when I asked about Sonos. So I asked about something about Sonos. I said, hey, Sonos, I'm having a hard time with this upgrade. Can somebody help me out? Is anyone else having problems with Sonos? We love Sonos and had it all at our home, and latest absolute sucks, and we can only listen to Sonos radio and not our own music. Even our local AV companies can't fix it. Does anyone know how to fix it? Sonos reaches out to me. I give a phone number to call, an email. They don't follow up for 1 week. So then finally I put this next tweet. What's a good replacement to Sonos? We're getting rid of all our Sonos products at our buildings. Their new app sucks. Customer service is lazy, fake at best. Not surprised why their market cap dropped from $5 billion in 2021 to $1.7 billion today. Look at the amount of views it gets 1 million. So then they start responding to other people bitching about Sonos, and the people say, don't respond to me. If you can't fix PBD Sonos system, what are you going to do with mine? I don't trust you, right? So they're kind of going through this. Eventually, the guy calls, talks to Jen. They fix the Sonos system. It's pretty complicated, but the guy was able to help out. And the guy that's helping Jen out says, hey, just to be honest with you, we are not fans of the new update. It's making us have to work twice as hard because it was easier to work before. So even Sonos knows that, right? But guess what? Public pressure got Sonos to pay attention to a couple of these updates and do something about it. When one of Trump's next 3 to-do lists becomes interest rates, you're going to see Jerome Powell get the kind of pressure he's never gotten from millions of people to lower rates. You'll see. And you know when I predict that'll happen? Q2 of next year. Q2. End of Q1, beginning of Q2 next year, you're going to see Trump put the kind of pressure on Jerome Powell you've never seen before.
Can't wait.
Okay? That's my and it's going to be Elon, Vivek, Trump, everybody. It's going to be everybody going after it. Similar to what happened with Justin Trudeau, that he says, hey, man, I may be stepping down. It's going to be that kind of pressure. Tom.
Well, remember you said we're going to have the year of investigation and all that. Q2 of next year, I agree with you, Pat, because I have flagged that. And I've just in my mind, as you were sitting here, I've come up with a word for it. Q2 of next year, April 1st to June 30th, after everybody's been confirmed and the new tax plan, I think this is going to be the quarter of change. And I think there's going to be massive changes in so many areas. And or it's going to be the quarter of coping. right? It's going to be the quarter of coping because all the cabinet members are going to be in there pushing buttons, moving levers, and doing things. But Q2 of next year, we're going to have a year of Washington, D.C. just in Q2 of next year.
Oh, I can't wait.
I mean, listen, change is coming. It's just right now they're sitting there and they're like, we don't need to give Powell pressure right now, but we will soon. Okay. But not right now. Let's kind of let him enjoy Christmas.
You think he's
going to
keep his job until May of 2026?
I think he can keep his job, but he needs to kind of play ball. If he doesn't, he's going to get a lot of pressure. Christmas around the corner. We are wearing the sweater. That is the most incredibly comfortable sweater. It hugs you.
Oh, I love it.
I dare you to order 1 and 2 for your family and wear it and say, I don't like it. Okay? I dare you to do it. On the back, if you're proud to say Merry Christmas, this one says Merry Christmas. If the camera can zoom in on Tom, Vinny, or Adam. Adam says Happy Hanukkah, but we're mainly going to focus on Merry Christmas and Happy Holidays.
Special order.
Okay? It crosses out Happy Holidays. Rob, if you can put the picture up there so people can see it.
It says Chappy
Instead
Hanukkah.
it says Merry Christmas. It's out there. And then we have a couple of the Merry Christmas hats that are left. If you can go back to the Merry Christmas hat, Rob, that we have left at the top. Those 2 are still here with scripture in it for some of you guys that want that. And then we have the pajamas. We have a bunch of gear. Future Looks Bright pajamas, Future Looks Bright shirts. And these pants are here matching the sweater that I'm wearing. That's got the Valuetainment logo, Future Looks Bright on the side, and the Future Looks Bright, what do you call this stuff?
I'm taking those.
What is this thing called?
The tassels. Tassel, the waistband tighteners.
there's
I don't even know the real
name
name.
for it, but
whatever,
they're here
Adam.
as well.
These are the softest sweaters I've ever felt in
this
my
is
life. I
just
swear to God. I
incredible
don't wear
wearing
sweaters
this.
in Miami. This is ridiculous.
Go place the order today. And the way you get it pre-Christmas is to put shipping that it's shipped out today. You do that. Today is the last day to get it. First 50, a unique Future Looks Bright mug coming your way. Place your orders if you're proud and comfortable saying Merry Christmas and sporting them when you go to the mall, anywhere during this season.
If you enjoyed this video, you want to watch more videos like this, click here. And if you want to watch the entire podcast, click here.